Let me quickly brief and summarize the taxation advice and the key concept to Alice and Albert. And it is very important for them to ensure to comply with the Internal Revenue Commission. Since both couple Alice and Albert generate income from the wages and the salary, and also from the business income, this income are subject to Income Tax Act prior to Section 65E of the Income Tax Act. As every salary and a business income earner knows that it is impossible to avoid tax. Let's look at Alice's income. Alice derives both income salary and the non-income salary. Non-income salary such as income from the business or dividend, interest, or rent. This non-salary income is assessed for tax on an annual basis. Each individual is assessed separately for tax purposes. There is no joint assessment of the income as husband and wife, unlike in certain other countries. Okay? The tax-free threshold minimum is 10,000 kina, or 22% income tax. And the tax will be paid according to the wages and the salary they earn. They call it payee or pay as you earn, prior to Section 65I of 2. All right. Let's look at firstly Alice's wages and the salary and the business income. Alice's income derives from the telecommunication firm of 50,000 kina per annum. This income is subject to the income tax at a standard tax rate applicable to individuals in Papua New Guinea. She had an assessable benefit, of 3,500 kina paid by telecommunication firm for her children's schooling is considered as allowable benefit. Remember this. Taxable value of allowances and the benefit for education fees for children of employees nil. Alright? While resident taxpayers are entitled to a tax rebate for fees paid to non-government primary or high school, whether in PNG or overseas, for the rebate is limited to the lesser of 25% of the net education expenses incurred, or 750 kina per dependent student child. In this case, she may claim for a total of 1,500 kina as a rebate. Let's look at Alice's business income or non-salary income. Alice business income of 55,000 kina from hairdressing business. This business income will be subject to income tax at a standard tax rate for business in Papua New Guinea. See, the opening and the closing stock will be used to calculate the cost of goods sold. This 200 kina, which will be added onto the total taxable income. A term deposit interest of 100 kina is to be also added onto the total taxable income. She paid 4,000 kina for renting the shop is considered as a deductible business expenses. She also paid a bookkeeping services of 6,000 kina. It's also considered as deductible business expenses and will reduce the taxable income from her business income. However, the rate she paid to her was not in line with the Internal Revenue Commission, because the minimum amount set was 500 kina per fortnight for every employees. Therefore, I advise you to make some adjustment, increase her wages and the salary minimum up to 500 kina or more. If you are not compliant with the terms and the conditions, then it is violations of the Income Tax Act. They may sue you for such actions or likely to be paid penalty for the violation. Let's look at Albert's income and the transaction incurred during the financial year. Albert has got a legal consultant business, total income of 300,000 kina and additional income of 20,000 kina. Both income is subject to the income tax at a standard tax rate for business in PNG. While this income of 20,000 kina will be included in the financial year of 2025 because it was not yet received. It was considered as an accounts receivable. The account receivable will be carried forward to the next financial year. Okay, the 30,000 kina paid for superannuation for a staff member is considered as a deductible business expenses. And they ensure to deduct the wages and the salary income tax for every individual employees. It is tax-free for an employee is provided with not more than 15% of employee's income. However, when an employee is receive a payout, it is accessible. Okay, let's look at Albert purchasing new computer for his office for 15,000 kina, which will be capitalized and depreciated over the useful life of the asset. Okay, the quality expenses was 15,000 kina minus with the depreciation. Therefore, you have to find the depreciation rate. Okay, 15,000 kina multiplied by 30% times 10 over 12 months of the year, which will give you 3,750 kina minus 15,000 kina. You will end up with 11,250 kina, which is the written down value as of 31st of the month of 12, 2024. Therefore, depreciation is allowable in respect of asset, which are included in properties prior to section 73 of 2. Okay, let's look at 800 kina received from selling the whole computer will be treated as a capital gain, and the additional income will be added onto total taxable income. Albert spent 500 kina during the year is considered as a client's entertainment expenses, are generally considered as deductible business expenses, subject to certain limitations and restrictions. Since they are a dependent of 2 kids, then dependent rebates are recognitions of the domestic responsibilities of taxpayers to provide a measure of relief for those taxpayers. Okay, therefore, in order to for them to claim a rebate for dependent salaries, and the wages declaration form must be obtained from the employer. Should be completed and give it to their employer for filing and to submit for Internal Revenue Commission for their consideration. And if husband and the wife both working, they may not claim rebate for the same dependent. Either one may claim or they may both share the claiming rebate. To gain the maximum benefit, the person on the highest income should claim for the dependent. Okay? When a taxpayer is claiming a tax rebate for work-related expenses or for other expenditure incurred during the financial year, they must submit a tax return at the end of the year, at the end of every financial year, prior to Division 18D, Section 213A to 213F. Okay, finally, remember that an employer who failed to remit the amount of tax deduction is subject to a penalty of 20% of the amount not remitted plus additional tax of 20% per annum. Therefore, ensure to comply with the Internal Revenue Commission in every financial year. Thank you very much. My ID number is 20 14 16 73. My name is Frank Akus. Thank you very much.